we can generally handle, raising funds. We can generally handle, financing it and guaranteeing. But I think the key would be, can you source and find great deals and bring those to us, and then we can take the ball and go from there.
Welcome to the Cash Flow Chronicles. I'm your host, Jonny and the founder of Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny, and I'm joined today by Kevin Romney. Kevin is the founder and managing director of Camino Verde Group, a firm he founded in 2019. He's responsible for underwriting, acquisitions, financing, legal, and corporate operations. He acquires value-add properties and manages the repositioning and asset management. He develops properties from the ground up, including the build-out of co-living properties in Southern California and the development of the master plan community Ephraim Crossing in rural Utah. Kevin, welcome to the show.
Great, Jonathan. Thank you for inviting me. It's good to be here.
Absolutely. We're grateful to have you. A lot to get to today. Not often you come across a group who's doing a, master community, right? Typically one little portion of it here and there, typically the multifamily portion. But before we get to that, kind of give us a backstory of what led you to Camino Verde Group.
Sure. I'd be glad to share that with you. So I've been an entrepreneur most of my life and have been involved in commercial real estate previously, but I had a business that I was getting ready to sell. A good friend of mine, Mike Ballard, I met with him for breakfast one morning, and I said, Mike, what am I going to do if I sell this company? What's going to be my next gig? And Mike is also a partner in a company called Ascent Multifamily Accounting. They do the back office accounting for about 50,000 units nationwide. And Mike said, we do the accounting for these multifamily owners, and they really, really do well financially. You and I both have some real estate experience. It might not be in multifamily, but it's in other things. Why don't we partner up and invest in multifamily deals? So I did my due diligence, and I came back to Mike and I said, yeah, Mike, let's do it. Let's partner up and start Camino Verde Group. So we did that about 3.5 years ago. We currently have about 700 units that we've syndicated that we manage, do the property management on. And then we've also gone into some development as well. So as you mentioned, we've got a property up in Ephraim, Utah that we're doing a master development plan on, and also doing some development on properties out in South Carolina, in Southern California, and some other areas. So that's what we've been up to. It's been a great 3.5 years. It's been fun and exciting. It certainly had some challenges, but it's a great industry. I wish I'd have gotten involved 20 or 30 years sooner.
Yeah, right. I mean, I feel like most people who get into this industry, that's the number one thing. You're like, hey, if you could go back, what would you do? I'd have gotten started sooner.
Yeah, exactly. I agree with that.
I love it. That's awesome. And you guys are kind of spread out. What's been the key to, kind of being able to diversify geographically?
That's a great question. Most of our properties are right here in Las Vegas, where we're based. That's where we bought our first property. Our first property we bought from a broker. It was on market. And then when he saw that we could get the deal closed, he began to bring us off market deals. Then we've expanded from there just through various different partnerships. Our projects down in Southern California were a partner down there that we were familiar with, and we're just a little slice of the GP on some of those development projects in Southern California. But we had a partner that we worked with in Charleston, South Carolina. The relationship was very good. He brought us 2 additional deals that we're working on there. We were mentoring some folks in Des Moines, Iowa. And so we partnered with them on 48 units there. And then we've got some roots in Utah. And so my partner was doing some tax credit work, some tax credit loans, and found out that there was a housing shortage in Ephraim, Utah. And that led us to acquiring a parcel of land, which led to another parcel of land, which led to another parcel, and now here we are with about 140 acres and a master plan community. So that's kind of, we've also got a property out in Hopkinsville, Kentucky, and that 258 units there, and that came to us through a property manager. So we always try and partner where we've got where we go places where we've got partners with feet on the ground that we trust, that we know, that we respect, and know that the property can be taken care of.
Yeah, that's really great insight there, because that's really a key, right? Is having someone there who knows it, especially when you're not familiar, right?
Right.
It's hard to just, do some market research online, look at some data and be, confident. Because one, as a street can make a difference between a B and C class property. So
Absolutely.
having that boots on the ground is vital. And so you're getting into the development space. Obviously that's a lot of land in Ephraim. And as you mentioned offline, it could even be 100 more acres. What's kind of the goal there and the keys to such a big development?
Well, Ephraim is a great town. Snow College is located there. Snow College would like to grow. They're a bit constrained because of housing. They've got enough housing for single students, but not enough housing for married students. So as we did our due diligence and looked and interviewed and talked to folks, we found that there's a shortage there of married student housing, but also a shortage of workforce housing. And so we actually purchased about 14 acres. And then as we were working with the city, and by the way, the city of Ephraim has just been phenomenal to work with. I speak very highly of Mayor Scott and the city council and others there in the city administration that have worked with us and helped us. But we found that some of the land across the street, Highway 89, was also for sale. And the city said, if we were able to purchase, if you could purchase this land, it might help us with some of our streets that we need to develop. And so we were able to purchase that, and working together with the city, we were able to come up with a master plan for the community that makes sense. And it's just taken off and gone from there. So we've got single family homes that are being developed. We've got townhomes that are currently under construction for rent. We've got townhomes for sale that will soon be being built. We've got space for hotel. We've got space for retail. We've got a major employer out of Salt Lake City who we've signed an agreement with to come and purchase about 38, 39 acres. I can't disclose who that is at the moment, but we anticipate closing on that property, and there being announcements here hopefully next month. So, and that corporation will bring about 320 jobs to Ephraim, and it'll be a great boon to the city and to the residents.
Wow. That's awesome. That's incredible. That's a whole, just absolutely, sounds like doubling what that the housing there at best, I'm sure. And so, obviously that's a multi-phase project. Is this an opportunity with investors? Are they invested in different phases? How is that structured?
So we have investors that came in and helped us purchase the land. One of the things that we were able to do as we dealt with the individuals selling the land is we were able to arrange many of the purchases. We've probably put together at least 10 different parcels of land, and on many of those we were able to arrange owner financing. Some of these individuals that were selling were farmers or second or third generation of individuals who had farmed, and we just as we worked with them to do the sale or to do the purchase, we just asked them, what are your needs? And we talked to them about tax needs. If you had a big sale and a big chunk of money come in, how's that going to affect your taxes? Would it be better to spread that over time, over installment payments, et cetera? And so we've worked with them and we're able to negotiate seller finance with a large number of the parcels that we purchased. And that's been very helpful. But yeah, it's and then coming up with all the land for this major employer that's coming to town, that was quite the ordeal. We had to do some horse trading to get a couple of parcels that on some holdouts that were, where it took a little bit of extra time, and it was a little bit more expensive than some of the first parcels we purchased. But anyway, it's all come together, and it's been a great thing, and will be a great thing for the city of Eastern.
That's awesome. And you obviously mentioned owner financing, especially as we head into, some economic uncertainty, creative financing, whatever you want to call it, really starts to come kind of top of mind. What are some keys there when you're working with sellers, owners, in terms of, creating a win-win?
Oh, great question. We have another property. It's one of the smallest properties that we own. It's just a 9-unit motel that we've converted into to multifamily that we have a master lease on with a group. And the seller had it on property on the market for a bit, and just working and asking questions and saying, okay, well, would this work for you? Would this work for you? What are your tax situations? And we were able to purchase that with a small amount down, and then we amortized it over 6 years. The payments are a little higher than we'd like since it's only a 6-year payout, but it works with the master lease that we have on it. And so I think it's a great opportunity to particularly with sellers that may have had a property on the market for a while, or that may have tax issues if they get paid all at once, that don't plan on doing a 1031 exchange, or they want to use this money for retirement. And so the key, in my opinion, on seller finance deals is just to ask a lot of questions. Don't be afraid to ask the seller, okay, what are your goals? What are you trying to accomplish? What do you plan to do with the proceeds? And then just be willing to propose various different alternatives. And so that's what's worked for us, is just not be afraid to open your mouth and ask questions and put some offers on the table. And that's been great process for us.
That's awesome. I love that. And it's so true, because, this is one of those sort of creative ways that you really can, really kind of come up with your own terms and create something that can work for everyone. And, not necessarily have to involve lenders and some of those other processes. Is this something you guys explore on a lot of your opportunities, or just kind of something that came about with a few of these?
So, on your bigger properties and your multifamily properties, it's probably much more difficult to be able to do something like that. Most of those folks, they've got loans they've got to pay off, and they're not looking for an owner finance. But we found that with smaller properties and individual owners that aren't corporations and landowners, we found it to be very, very successful in our efforts there.
Yeah, that's awesome. And that's pretty common there, especially when you get, like you said, a lot of these second, third generation people. Very common in the smaller multifamily as well. They've owned them for 30, 40 years. Common in self-storage as well, which is an asset class that I work in sometimes. And so one thing I want to circle back to, kind of come full circle, is you mentioned off market, and that's a big key for you guys. What's really the key there, in being able to get to that point with these brokers?
So the key is to show the broker that you can get a deal closed. Show them that you can put it under contract, you can get the financing, and you can hit the close date. And if you can do that, then you can gain brokers' trust, and they'll come to you with their pocket listings and their off-market deals, and maybe run the deals by you before they run them by anybody else. So here in Las Vegas, of the properties that we've purchased, the first one we bought from one particular broker was on market, and then after that, he brought us, I think, another 5 deals that were off market that we've purchased. One is currently under contract, and that's just been a huge boon to our growth. And if you can do that with various different brokers, then you've got a source of off-market deals where the competition is a little bit less. You're not competing with so many different people. Perhaps you can acquire it at a better price point than you could if it was on market. One of the best stories about how we acquired a property off market was we had a property manager who worked with a larger company, and she said, you know, I'm going to break off and I'm going to start my own company. I'd like to manage a property for you. So we told her, well, go find a property, and we you know, if the numbers are good, we can purchase it and we'll let you manage it. And so she brought us a property this is the one in Hopkinsville, Kentucky. And she brought it to us. It was off market. The owner had recently purchased it and remodeled it. He was getting ready to flip it. You know, he was using family to manage the property. It didn't have the best financials in the world, so it was a little bit harder for him to go out and put it on the market and list it with a broker. And besides, she knew him well and had worked with him closely, and he was willing to sell it. So we were able to put that under contract. That was fairly early on in our progress, and we didn't know if we could raise the money on our own. So we brought in some great partners out of Austin, Texas area that helped us raise the money. We basically had 3 investors that came in. We raised $4 million, 2 of them with 1031 exchange money, and 1 of them with just a large contribution, and we were able to put that property under contract and purchase it. It's been a phenomenal property. It's been great. Just recently, we were able to, just before the interest rates started to go up, we were able to get a 10-year note, interest only, at 3.35% interest. So this is turned into a legacy property that, I mean, we'll probably hold it for the entire 10 years. When we refinanced, the investors got, I think it was a little north of 70% of all their money, of their original investment back. And now it's just kind of a cash cow that throws out dividends on a regular basis. So, I mean, that was a great find, again, from a property management company who was hungry and wanted us to buy a property so that they could manage it. And they do manage it, and they've done a phenomenal job managing it. They're just great.
Wow, that's awesome, and obviously speaks volumes about, you know, relationships and developing and maintaining those relationships. And like you mentioned in the beginning, right, is having that, you know, that relationship with someone who's there, understands the market. You know, that's not a typical market, right, that you see in terms of your, you know, big, you know, Las Vegas, for instance, right?
Right.
You don't really put Las Vegas and Kentucky on the same list typically. Yeah, that's awesome. So as far as, you know, the future goes for you guys, you got the development. Any other, you know, kind of goals for you guys moving forward?
Sure. Well, thanks for asking. One of the things we want to do is continue to mentor people. As I mentioned on the Kentucky deal, we had some great mentors that helped us be able to put that property under contract and to manage it properly. And we learned from that, you know, mentoring and great people and surrounding yourself with great partners is extremely important. So we did a similar thing. We had a group out of Minnesota who had invested in 2 or 3 of our properties here in Las Vegas. And they said, you know, I think we think we're ready to go to the next step, and we'd like to go to the next step, but we don't quite know how to do everything. Will you work with us and help us? And so they found 48 units in Des Moines, Iowa, which we partnered with them and helped. You know, we were guarantors for the debt and you know, helped raise funds to acquire that property, and that's been another great partnership. So what do we plan for the future? We plan to mentor, work with other people. You know, develop a few more very strong partnerships. Our goal is 4 acquisitions per year. Most of the acquisitions we've done to this point, with the exception of the one out in Kentucky, most of our acquisitions have been in the 20 to 50 unit range. We're now ready to take that step up to the bigger properties, so we're looking at 50 and up. You get into the bigger size properties, and then you're competing a lot more with institutional money. So, you know, we're looking heavily in that, you know, 50 to 120 unit range, but we're also willing to go up to 200 units. And we've got some potential investors that would support us and would work with us on that. So our goal is to do 4 acquisitions per year, and then to do 1 or 2 developments per year. And that's what we're looking for, and that's kind of what our goals are for 2023 and where we're headed.
I love it. Yeah, that 50 to 100 really, kind of that mid range does seem to be a nice little sweet spot where, like you said, the institutional money's not really playing there, and so you can really find some really, really good opportunities in that space. And of course, you can go bigger, and as you build that track record, the bigger ones seem to feel a little bit easier as well. And so with the mentoring, what are some keys, if someone's looking to, find partners, right? Potentially come to you guys. What are some keys for being able to add value to the partnership, and present themselves as a good partner?
Oh, great question, Jonathan. Thanks for asking. So, as we mentor folks, we want to pay it forward as folks helped us. But what we would be looking for in a partner is their ability to be able to find and source great properties. That would be key. Is being able to find and source properties that are priced well and cash flow, and we can put under contract and close, and make sure that we can hit our investor return, our goals for our investors. So that would be item number 1. Item number 2 is, they've got to be willing to put in elbow grease. They've got to be willing to, they've got to have some knowledge of the market. They've got to have the ability to be, our eyes and feet on the ground there to be able to get things done and accomplish things. We always hire third-party property management companies, so we wouldn't expect them to manage, but we would expect them to be highly involved in the asset management of the property. So finding, sourcing, those would be the key things. We can generally handle, raising funds. We can generally handle, financing it and guaranteeing. But I think the key would be, can you source and find great deals and bring those to us, and then we can take the ball and go from there. And we involve them. We include them as in the general partnership, and in the dividends and the distributions. And so we try to be very fair, and we think we've done a great job of that, and look forward to doing more of that as we move forward.
That's so great. That's what I love about this industry is when, groups or individuals want to turn around and help, right? Like how you mentioned, you had great mentors along the way, helped you guys out. Now you want to turn around and do the same because you have that opportunity. And I tell people the 2 best ways to get into this industry are, being that, as you say, feet on the ground, being able to source deals, especially if you're looking in your local market, and raising capital. I subjectively think those are probably 2 of the best ways to really bring value to a partnership.
Absolutely, I agree.
Awesome. Well, this has been really, really great insight. I love hearing about, Utah growing, especially places like Ephraim. That's one of those real, I don't even know if you call it a tertiary. That's out there, but that's awesome to hear that it's growing.
It is.
I imagine it's like you said, really based on Snow College.
Yeah, it is. And then they've got some, like this new company that'll be moving down from Salt Lake that or will be building there and employing about 300 employees. There's, in some of our conversations with the city, they said, the thing is that the problem is we export our best asset, which is our youth. There's not jobs here. So people leave central Utah and they go up to Salt Lake or other markets. And we're just trying to give those who want to stay in Ephraim an opportunity with jobs and housing that they could find elsewhere. And so we're just excited about it. But yes, it is absolutely rural Utah, but we're having a blast and having a lot of fun working with them. And they're great folks to work with.
I love it. That's awesome. Really something to be said about those small towns, for sure. Well, as we wind down here, we'll jump to the final five. First question, best advice you've gotten from a mentor?
Best advice I've gotten from a mentor. Just keep going after it. Just keep plugging along. Put one foot in front of the other.
Yeah, it really is the key, right?
It is.
It's only a failure if you quit. Isn't that the old saying?
That's right. That's right.
What is it about your career that makes you feel like you're fulfilling your why?
You know, as I mentioned, we started this company 3.5 years ago, and it's just been phenomenal. I've done a lot of things in my career, but this has been very satisfying, very fulfilling. And one of the things that we've already talked about is paying it forward, helping other people. We like to bless the lives of other folks, and help spread what we've been able to do, and let other folks share in that.
I love it. That's awesome. Favorite non-real estate or investment related book?
I just finished one, and I'm trying to remember the name of it. I think it was by Keith Ferris, Never Eat Alone. I thought that was a fantastic book on networking. It was great.
Awesome. Love it. Going to add that to the list. If you could have any superpower, what would it be?
I don't know. That's one I haven't given a lot of thought to. To be invisible. I think that would be kind of cool. Let's go with that one.
I love it. Yeah, absolutely. Would help you learn a lot of things. That's for sure.
You could learn a whole lot if you were invisible. That's for sure.
I love it. Awesome. Last one. What's the best way for people to get a hold of you and learn more?
Fantastic. Thanks for asking. They can reach me at, they can learn about our company at CaminoVerdeGroup.com. That's our website. And my email address is kevin@CaminoVerdeGroup.com. And I love to visit with anybody that might have questions, especially somebody who's, needs some mentoring and would like a little help getting started in the business.
Awesome. We will link that in the show notes, make it super easy. Kevin, thank you so much for coming on. This has been awesome.
You bet. Thank you, Jonathan. Appreciate it.
Absolutely. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to CataniCapitalGroup.com to learn more.